Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video corresponds to the market, which is again capitulating. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should there with their own due diligence and research, and I'm not in favor against any company that I talk about. I'm not a member of the NSC and BSC, and that I am not a portfolio advisor. Whatever discussions with respect to markets or portfolio I have is purely on the basis of my experience into the market, and whatever decisions with respect to investments and trading you take, kindly take that on note is that it is laden with market risk, and do consult your financial advisor before doing that. Before I talk about the markets, a small request: kindly support me on Patreon or YouTube or WhatsApp. When you do that, you help me grow the channel. Help you also ask me questions, seek out answers in greater detail. Once you get that $10 membership, you'll have access to my portfolio, my watch list, analysis on different companies, discussion on domestic and global economies. Long-term pick from my end. I've just put that up yesterday since the markets are capitulating, and whatever queries you have, I'll be answering that. So let's get quickly to the market, and I'll take you to the TradingView website, and we'll discuss about the market in detail. Let's discuss about the small cap index, which is around 48,000, just went below 48,000 in live market today. The RSI, if you see here, is around 25. So the capitulation is in full force. But if you see from the top, around 57,000, let's say round it off to around 58,000 was probably the high, and we are at 48,000. So we are down not that much actually from the top. So if we look at it, 10,000 points, 8,000 index is around 17%. I have seen uh, small cap indices go down 25-30% as well, but we are not at all at the beginning of the fall. We are somewhere in the middle. I think over the next week, 2 weeks time, this should end. The way we are falling should end now. The question is which sectors will perform, which companies will perform. Will only find out once the recovery take place. But at the moment, 17-18% fall from the top for the index. So for the small cap index, so if you are invested or trading into mid and small cap companies, so if I look at the mid cap index as well, that has gone to around 51,700 from 6,900, 60,900. So let's just round this off to around a fall of say to 52,000 from 61,000. That's around 9,000 points cap index, which is around 15%. 15% mid cap index has fallen. So a reasonable decline from the top we have seen in mid and small cap in terms of indices. So if you are down less than say 17-18% on your index, on your portfolio, if you are invested into mid and small cap, then you're doing fine. So that's what I wanted to say. Again, I want to reiterate that if you are down less than 17% on your long term mid and small cap portfolio, then you're doing okay. The stocks must be the stronger ones since you're not down more than the index. That's the first thing you need to look at. If you're down more than 17-18% on your portfolio, then you need to look at your stocks, which stocks are the weak one. You need to churn depending on the results that are coming through, and on your analysis whether those companies are going to produce top quality results going forward, or the growth is going to slow down. So your benchmark would be around 17%. If you're down less than 17% on your mid and small cap portfolio, then you are okay. And if you're down only 12-13%, then you're fine as well. I am down around 17 to 20% on my portfolio, so I can vouch for that. So it's not that I am not down, I am fully invested into the market. I had seen this coming, but not at such ferocity. Now at the moment, if I come back to the small cap index, we are at an RSI of 25. If I look at a 5-year chart of this index, then this gives me more clarity. This will give you also more clarity. So the 50-week moving average is around 50,900. We have broken that. We are at 48,000 now. If you go back in time. And if you go to somewhere around 2024 February, uh, there the high was around 46,000. And if I go further back in start of 2024, we were around those levels. If I come to June, when the market fell from 48,900, so that's nearly 50,000 on the index, and we went to 43,200 on that day, on that dreaded day of the elections results, when they came out, and then the market started to move up. So I think 43,000 is a very strong support from here. I had told earlier that 48, 49,000 is a very strong support. It looks like we are breaking that. The next level to watch out is around 43,000. On a 5-year chart, we are at an RSI of around 35, just about 35 at the lows. And that gives me confidence that we are very close to a bottom, because in March 23 on a long term chart the RSI went to around 3940, and in June of 22, that was the real capitulation time. We were at an RSI of around 36, and we are well below that now. We are closer to 35, we are below that. uh, why I'm talking of June 22 is because from October 21, when the market started to fall, this was October 21, when we made a high of 30,400, we fell sharply till June, and then we went up. So we fell for 8 months and we went up. The kind of fall we had in 8 months, we have already had in the last, you can say, 1 month or so. And so that is why I feel that the fall might be ending sooner rather than later. Probably a week's time from now, we could be down another 5-7% on the index. That would be around say 3,000 points more on the index, around 45,000. I think around 45,000 there should be some base for the small cap index. Coming to the I would say the Nifty overall. So let me just look at where the Nifty is. So Nifty is at 22,800. Just to give you an idea as to how the valuations are panning out, we are down more than 1% on the Nifty as well. Nifty was faring well earlier in the day. So if I take out the 1 day chart, it was doing fine till around 10 o'clock, and then the fall started to really take place, and now we are down big time. On a 5-year chart on the Nifty as well, we are below the 50-week moving average of around 23,400. We are down to 22,800. And here again, on the longer term chart, we see that we are around 38, 38 and a half on the RSI. If we go back to June 22, we were around 36 or so, 36 and a half. So uh, we are very close here as well. And why I'm talking of Nifty is because I want to just give you an idea of the valuation. We believe that this year we are going to do 1100 rupees of EPS earnings. And so based on 1100 rupees, we are trading at 20.7 times. Normally 20.4 to 20 times, 20.5 around 22,500. If you are invested into the large cap stocks, larger stocks, say more than 1 lakh crore, 1 lakh 50,000 crore stocks, larger mid caps or large cap Nifty stocks, then the Nifty is down. Let's see how much Nifty is down. Let's round off the top and the current levels. Then we are down somewhere around 3,500 points. That is, we are down around 13.5%. So if you are invested into large companies only, the large caps, and you're down less than 13%, then you're doing fine on your index. So there should be, I still believe there should be a blend of large, mid, and small caps in your portfolio. If you're a real risk taker like I am, and I want to build wealth quickly, and I want to get into the smaller and mid cap kind of stocks. So if you're like that, then you would be having 70-80% mid and small cap, 20% large cap, like that. Then you have to take this pain. You cannot avoid it, even though you can do all your analysis, technical analysis and everything. Eventually you'll be caught out. So what happened was, over the last 4 years, since 2020 March, if I go back to the small cap index since 2020 March. Uh, we go back there. So this was around here. The market has gone up extremely, means quickly and to a larger extent, from around 9,000 lows of 9,000 has become highs of 58,000. It has gone up 6.5x. In the index itself has gone up 6.5x in a space of probably 5 years. Let's say 5 years, four and a half, nearly 5 years. In 5 years we have gone up 6.5x on the index. There had to be some correction somewhere. We had a smallish kind of a correction, a bear market sort of a situation from 21 October all the way to say 22 Jan, all the way to 22 June. And then we had a lull for about a year till 23 March, and then we went up further. I think we are in this phase. We are in this phase of October 21 to 22 June. This was a 8 month period, and then we went up. I believe that this sort of consolidation is extremely good for the market. We are trading at around 30 times for the small cap index on the earnings, which is not expensive but not cheap either. We went to around 23 times during March 23. We went to as low as 23 times. So there is room on the downside. I won't say a lot, but at least 2-3 thousand points more on the downside possible. So your portfolio could get a hit of between 7 to 10% more, and be ready for that. So if you are invested into top quality companies that you expect to do well over the next 2 years, invest into those. Have a 2 year 3 year time frame only, and then get into the market. If you have a 6 months time frame, then you will be in deep trouble. You could be doing well, you could find the bottom and make money over the next 6 months, but maybe that the markets would go up and your stocks will not go up. So if you are a trader, respect the screen and probably short the market if you're able to. If you are trading on the long side, then wait for the market to give you some sort of a signal. Or what sort of signal that we are talking about for the smaller companies? uh, we are looking at a scenario where 51,000 is for me. The small cap index, BSC small cap index, is what I'm looking at. Above 51,000 is where one should look at buying into the market. Remember that the 50 DMA is around 53,700. So above 51,000, or at least above the highs of the last few days. So over the last 5 days, we have seen a lot of falls. So at least above this level of around 51,500 is where you should look at buying into your smaller companies and making money over a period of time. Similarly, on the mid cap index, you should be looking at levels which should be more than 54,000 to buy into such companies. Otherwise, just stay put, let this market play out, and then take a call as to what needs to be done. Again, it is not that this will continue forever. This is just a phase, and there has to be corrections for the market to take a breather and then move higher. I think around 22,500 on the Nifty is very interesting levels, because at that level we'll be trading at 20 and a half times current earnings, and on forward earnings at 22,500. I've said that earlier as well. On 1230 just about 18.3 times, which is par for the course for the last 5 7 8 years, that it's normally markets trade around 17 18 times. So 22,500 or so is where I see this market bottoming out altogether finally, and I have said that earlier as well. So this was a video on the analysis for the market. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.